Hey everyone, Tesla unfortunately got a 1-2 punch of bad news today, December 13th, as I'm recording this, that sent the stock price down roughly 3% on the news. Now, interestingly, it was the second part of the news story that really sent the stock price down meaningfully, in my opinion. One of the items, although it may catch headlines, I don't think is meaningful enough to cause the stock price to fall all that much. So I'll discuss that in this video. I'll also highlight what this could mean for Tesla stock investors. So let's get right into the news.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first item to highlight is the recall. Tesla said that in a recall filing that its autopilot software system controls may not be sufficient to prevent driver misuse and could increase the risk of crash. According to acting NHTSA administrator Ann Carson at a U.S. House hearing on Wednesday, praised Tesla for agreeing to the recall. So they're happy that Tesla agreed to recall. Now, recall usually means that the car, in this case, there's 2 million cars recalled. But usually for a manufacturer, what this means is the people with those 2 million cars would have to physically take them to a dealership location to have the cars worked on, right? And that is usually expensive because it takes service, labor hours, maybe parts have to be ordered, but that's not the case here. This is a software recall. So Tesla over the air provided an update. While it may cost the company some money, it's more of a reputational damage than a big cost on the company. In fact, there was no mention of a cost. Usually there may be estimates that will be announced in conjunction with the recall of this magnitude. So for that reason, I say that this, news item, while it might catch headlines and it might not be great, it's not going to meaningfully impact the company's bottom line. So for that reason, I say it was the second news item that I think really caused Tesla stock price to fall today. So let's look at what that was. So the second news item is that Tesla Model 3 trims are expected to lose the $7,500 tax credit in the US. So the situation with the tax credit is right now, buyers of Tesla Model 3 can get that $7,500 tax credit. They've been able to get this for the most part of 2023, but starting 2024, they're not going to be able to get that. So the situation will change significantly in 2024, and even Tesla will not be able to enroll its models in the program. The IRS guidance received by Tesla indicates the Model 3 rear-wheel drive and the Model 3 long range will lose the entire $7,500 tax credit. And that's meaningful news because for a purchaser of a Tesla Model 3, let's say the price is around $50,000, the average price, some are lower, some are higher. That's at least or roughly 15% of a discount. And so now you're going to lose that when you're going to buy a Tesla Model 3. That's going to significantly change the competitive dynamics when you're looking at EVs and you're saying, all right, there's another one that does get the tax credit. I might choose that other EV instead. Or for consumers that are looking to choose between an EV or internal combustion engine, this $7,500 tax credit is a major incentive on why some people are switching to EVs. Without this, even with this tax credit, EVs comparison to similar to internal combustion engine vehicles are more expensive and they're less convenient even with the $7,500 tax credit. So now imagine if you remove that $7,500 tax credit, how much more expensive an EV would be versus a similarly spec'd out internal combustion engine car. And so it puts it at a big disadvantage. Already, Tesla has found itself cutting prices all year long in 2023, even though that 7,500 tax credit has been part of its offering. And now imagine in 2024, it's not going to be able to offer that, and how that's going to impact sales, how that's going to impact Tesla's pricing. I wouldn't be surprised if there was more price cuts coming in 2024 to compensate for the fact that consumers will no longer have this. Also, the leased vehicles, so far from my understanding, are not going to be excluded from this. So Tesla might favor offering better lease deals or might encourage more leasing compared to buying to compensate for this change in tax policy. Regardless, this is not good news for Tesla. This is not good news for Tesla. And in my opinion, this justifies the stock price falling because this is a meaningful impact on the business. Unlike the recall, which is just mostly a reputational damage, this is more so a meaningful impact on the bottom line, on sales, on revenue, on costs, and on profitability and cash flow. So you can understand why Tesla's stock price as of this recording on December 13th is down 2.86% on the news. I wouldn't have been surprised if it was down by more than this. I wouldn't have been surprised. But Tesla is a unique company and it's a unique stock that sometimes trades in a way that excludes the fundamental factors of the business, right? There's a lot of people that hold Tesla stock and buy Tesla stock and ignore any short-term factors around the business, any bad news. They just hold the stock with the hopes that in the long term, the company's going to become a dominant EV player with 10 million, 20 million unit sales, driverless car technology, robots, energy. And so they're looking at those high prospects and they're looking at these near-term issues like, okay, whatever, it's a short-term impact. Maybe sales will fall by a little bit. Maybe the profit margin falls by a little bit. That's okay. We're willing to weather that storm because the long-term benefits is going to be so great that we're going to forget about these short-term fluctuations in price. And that's understandable. Tesla does have excellent prospects. It does have a vertically integrated business. It's investing in driverless car technology. If it achieves full driverless car technology, which again today we saw with the recall how difficult it's going to be. If it does achieve that though, that's going to be a huge benefit to Tesla's stock price. But for now, I suspect the impact is going to be a continuously falling gross profit margin for Tesla. This has already came down. It peaked out at about 29% gross profit margin January of 2022. That's when all the factors were working in Tesla's favor. Supply chain shortages were hindering internal combustion engine vehicle manufacturers from increasing supply. And so that limited supply of cars in the market, that forced some consumers to choose EVs, which may or may not have chosen an EV to begin with. And they went and they bought a Tesla because it was available when other vehicles were not. However, as 2022 rolled on, inflation started to hit Tesla. Competition started to increase with other EV manufacturers ramping up production. And then supply chain shortages eased. And so consumers had other choices. And after the inflation impacts of 2022 started to hit Tesla's profitability, then in 2023 came all the price cuts, and that brought the profit margin down even more. So 2022 was more about inflation and competition increasing the cost of goods sold, and then 2023 has been about the cost cutting that's hurt its profit margin. Even though inflation has eased somewhat in 2023, especially with battery prices, lithium prices coming down. And 2024, I suspect, is going to be more a story of competition and falling prices that's going to bring down gross profit margins even more. I suspect there's going to be more price cuts from Tesla, especially on these models that are going to be impacted by the $7,500 tax credit. We've seen Tesla management choosing to cut prices in favor of losing market share. So right now, as it stands, if Tesla's going to lose that $7,500 credit, when consumers compare Tesla's Model 3 with other cars that are, with the tax credit, Tesla's going to lose market share to those cars. And so I think management, rather than lose that market share, is going to choose to offer lower prices so that it can put itself on closer footing with competitors. Tesla has shown investors that, at least for now, the strategy is let's sacrifice profit margins. We have room to work with here. 17.89% gross profit margin is still really good. So they have room to work with. They're choosing to sacrifice those profit margins so that they can maintain market share and increase unit sales. So if they continue with that strategy, which we have no reason to believe that they're going to change that strategy, I suspect that gross profit margins will fall even more in 2024. So this news of the loss of the $7,500 tax credit, I think instead of it hurting Tesla's sales, I think it's going to hurt profit margin, because I think Tesla's going to respond by lowering prices instead of responding by saying, oh, well, we'll just lose that market share. I don't think Tesla wants to give up market share. And so I think for 2024, the gross profit margin, I wouldn't be surprised if it goes below 15% and approaches 12%, at least in 1 or 2 quarters in the year, given all of these forces, these macroeconomic impacts working against Tesla for the year. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.